not the first time that investors are facing this sort of crisis.
It's not.
Massive haircuts on portfolio values. We had the Great Depression. We had more recently the global financial crisis. What lessons can we pick from them? Maybe let's just start from the Great Depression, 1929, the famous 1929.
Correct.
Yes.
I mean, neither you and I were there, we rely on history,
We rely on
to
history.
try and replicate it and see what we can learn from it.
Yes.
So in 1929, more famously known as the Great Depression, and the Black Mondays, your Black Tuesdays, your Black Thursdays, you know, it was mostly almost sort of what the pandemic you're having right now, but this time it was more related to the markets. So we saw a couple of guys, there was that movement from rural to urban. So guys were just more or less what we see in Kenya, and most of the guys were moving to the urban areas because of the industrialization that was happening then. And now due to that, the guys who were left in the agricultural sector, because now America was opening up to more nations and everything else, there was an overproduction, especially in the agricultural sector. So what did this do? Is prices for those commodities started to come off. And actually, if you read through the Great Depression, is agricultural and the slump in agricultural produce is blamed as one of the key reasons for the Great Depression. So now what did the central banks decide to do? So the guys, the big boys, the Morgan Stanleys, your BlackRocks, decided to come together because these had hit their markets and decided, you know what, you're going to put up a fund collectively and you're going to buy all these cheap stocks at prices above the market levels. And that's what they did. And they did that, and we saw a reverse of the trend. We saw an interim uptick. Prices started to improve. And now what did the guys with the margin calls do? They were like, oh great, this is now a time for us to exit and just book our profits. So these guys came in again with the big guns and started selling to these guys. So your investment banks could not sustain this for long. So again, we saw another reverse.
Yes.
And this time it went all the way down. And now coupled with, now this was happening now globally, you go to your LSE in London, top bankers, top investors were jailed for fraud, you know, front-running clients and all that stuff. LSE lost close to 20%. This again, for any American investor with an offshore mandate, this became another hit to it. And we saw the Dow lose close, the NYC, lose close to 24% in value. The next day, which is now the famous Black Tuesday, another down another 12%. It got to a point where everyone was selling and there were no buyers at all. You know, so this went all through until sometime in 1930, 1931, when now the government decided, you know what, it's time to act. And they put in a few measures that to support the market. We had a few guys like the Babson who came and predicted, you know what, this is not the end. We're going to have some good times, but then again, we're going to face this, you know. And the market became good for a while. It was called the Great Decade that was coming next. The next 10 years were good. But then again, this was replicated, and it sort of became now a business cycle that every 10 years we are having sort of a recession. If you fast forward to us, in 2008, we're just from another crisis with Syria in 1998. You come to 2008, we had again the global financial crisis, where you're talking now about something maybe we might now know more of, is about the housing market in the States, where they went out and now are giving, you know, so banks would lend to consumers. You go get a loan, you're vetted, you get a loan, you go buy a house, investment banks come, take up these houses, split them into investable assets, calling them the CDOs, sell these, get a guy to rate all these assets, depending on, you know, you're a CEO, you're an MD, you're a low risk lender, you're the guy down there selling your Mahindi and all this stuff, you're more riskier. So a rating was applied to all these guys. And now investors out there who are looking for new asset classes would come and buy top of these. So it became so bad, and now greed started getting into the way, where now there are banks, because all they need to do is go get someone, give them a loan, and they're getting this money from the investment banks. So now they're giving every Tom, Dick and Harry on the road a loan to buy a house. So it became so bad where now the NPL started shooting and these guys could not repay. You go take the houses, who are you selling the houses to? And that's how it spiraled all the way until we had the Great Recession in the Great Financial Crisis in 2008 during Obama time. Market, of course, again, when America sneezes, the whole world catches a cold, and it became tough, especially for African markets who are depending on these FDIs. So we got out of that, and now guys were pricing in another recession in 10 years. So we're talking about 2018. We saw that slide in terms of investments, and guys were going on a go slow, just waiting for it. Nothing really came of it until now. here we are 2 years
With,
post. We are 2 years late.
We have manufactured COVID-19.
We've manufactured COVID-19 and we're essentially at a recession, yeah?
Yes.
So every time we fall below 2.5%
Yes.
GDP for global GDP,
Yes.
we get onto a recession.
I see.
We are more comfortable above 2.5%. As we speak right now, we are at 2.2, 2.3%. So ideally, again, we are back to a recession.
So you foresee a recession from here?
We are in a recession.
We are in a recession.
We are in a recession.
We're in a recession.
Yes.
The question is how long
Will this last?
Yes. How long did the Great Depression last?
So the Great Depression lasted 2 to 3 years.
2 to 3 years.
Yes, so it was mostly around 2
two
years.
very difficult,
Two very tough
very
years.
yes,
Correct.
Yeah.
And of course, we had the investment banks trying to prop up the market. They tried for a while. It flopped again.
Yes.
The margin callers came, brought it down.
Yes.
We had the government come up with a few stimulus packages. Again, we saw an uptick that now again lasted for a couple of years, close to 10.
Yeah.
Then again, we were back, you know.
Yeah.
So it was almost as if all the ills that happened during the 1929 to 1931 were not fully sorted, and they were sort of replicating every now and then. And this became close to every 10 years. Yes, as we are following the business cycle.
Yeah.
Yes.
Yeah.
So these again, the COVID, if we are to benchmark against other recessions,
Yes.
the 2008 I think lasted another 2 years, 2
Yeah.
tough years as well.
Yeah.
So if you're talking about 2020,
Yeah.
then ideally by 2022, these should be totally in our past.
Yeah.
But then again, we need to look at countries have become smarter,
Yeah.
technology has become smarter,
Yeah.
you know, and we could sort this in a year again, to my projection,
Yeah.
in a year or less.
Yeah.
Yeah.
So again, we go back to the same question: is it time to buy? And if you're early in the recession, then we might end up like the investment banks.
You know, the question,
You
yeah,
think you're buying cheap, but
there's cheaper to come.
it's cheaper to come.
Yeah. So what we've seen, and I think the best case scenario is in the US.
Yeah.
Now they've pumped in 150 trillion.
Yeah.
You know, to almost they have all these payroll tax cuts. You know, to protect the wage earners.
Yeah.
So what the question is, the 150 million Kenya shillings that is pumped to the US economy, that is mainly to support the small businesses, to support cash flows. You know, they're doing their buybacks. Even when you go all the way to the Europe, they're also doing the bond buybacks to just make sure there's cash to go around, to make sure that the demand side of it is not affected, to make sure that people consume, to make sure that now we'll remove all these quarantines and guests can continue going on with their daily lives. And I'm telling you, once you get a proper directive on this is how you control this thing. You know, if you're going to take antiretroviral and you know, you're going to get well from this, when you get there, then everything becomes business as usual. I mean, right now we are living with HIV and AIDS as usual. So
But is a COVID-19 a distraction then? Because we seem to be having two things happening at the same time. Early on, we're early in a recession.
yeah,
Possible.
correct.
Because you and I can't be certainly sure. And there's COVID-19 that has come in, only to maybe to accelerate things.
Yeah.
So how do we? What should investors? What's a reasonable expectation from an investor's point of view?